Hi everyone, Nick here. Wanted to recap the day, Tuesday. I think it deserves a video given what happened today. This is just incredible action today. So anyway, I just wanted to recap the day and tell you my thoughts on the fly. I don't have a script, so it might run on a little bit, but I think it'll be informative and it just tells you exactly what I'm thinking and what's going on. All right, so obviously today was very significant. Yesterday we had a decent day. Today started out great and then immediately went to awful, and then it ended up another Super Tuesday. Super Tuesday, not because it ended up just up about 0.5%, 0.5%, just averaging across the board of indices. It's because where it came from to close there. So the Nasdaq swing was from 34.98 to cash in the morning, and then went down to 3,400 or 3404, and then it ended up now it's about 34.91. So an incredible round trip. You can see that round trip right here, from up here down in the valley, and all across the board. You can see the same valley except for the causes of those, which is a peak. So anyway, this is the SPX, basically. You can think about it. It ended up closing green, a nice green day for that, zero point 0.7 or so. And the Nasdaq, similarly, they got tested exactly the same time. Apple got tested, and I'm sick of hearing myself saying it. 505 to 515. I want to see them continue defending it. Here it is getting tested. It held up at the 515 level for the longest time, and then suddenly it got whooshed down on the headlines of increased headlines, which, by the way, were from last night. All the goings on, I had read articles about them last night, that there were skirmishes, actual firefights between locally in Ukraine. So anyway, but CNBC decided to air it and concentrate on it, so that took us a whoosh down to 511, from which we sprang quickly and hard. So, but with Apple, I keep saying, do not chase Apple. Don't chase it. It'll hold up great, relatively speaking, but I wouldn't chase it without a headline, a positive headline of some widget they came out with, other than a new iteration of an iPhone. It's not to be chased, and as a matter of fact, it's shortable. So Google, an incredible day. It started out so strong in the 50s. This is the Google L, G-O-G-L, and then midday got tested really hard. It was down over 2%, both of them. Strangely though, for the first day that I can remember, the Goog, regular old ticker, did almost just a little bit better in the depth than the Goog L. I'm not sure why. Up until now, everybody's favoring Google L, but today Goog kept up with it. So anyway, side note. So Google got tested hard and then sprang back up, which makes me definitely happy about taking a long position into Google's earnings, a position that I can, first of all, is I can walk away from saying, oh, okay, I tried a few $1,000s on it and I lost it, or I can lower my entry point after the fact by selling calls against whatever asset I end up owning. So if I buy a call or call spread, if I buy a call, a longer dated call, say June, September, or January 15, then if I get hit on a Google sell-off, I can sell calls against that and lower my entry point while I wait for it to recover, or take my losses. Anyway, I'm pretty sure as of today, unless something drastic happens tomorrow that changes my mind, that the Google long position should be taken for me. TF is this here is this small caps. They got tested, but not as steep. I mean, they got tested earlier than everybody else, and then kind of tried to stabilize at some point. You see my drawings all over it, but then they rebounded hard, and I saw it coming, and I tweeted it out there saying, okay, right here, I said life in the small caps right here. This little thing showed me life, and then started butting up here and trying to break out, and I was like, come on, and then Putin, it broke out, and then another headline regurgitated about Putin saying something that the West better recognize that this is not cool what they're doing in Ukraine. And I think he's right about that. But anyway, and then we dropped a little bit. I was like, uh-oh. But then that headline faded quickly. So all in all, an incredible day. Just because if you consider it linear in a linear fashion, so the distance between this one, the here, and back up to here would have been a run that like nobody's business. So that's what's impressive. This right here is the yen, and that's the culprit. It climbed. Let me go to 5 minutes to show you how it coincided with the market whooshes. I keep telling you that the yen is, first it tried to butt up against old tops and it failed, and I was hoping it would fail here. It didn't. It ran up, and that's what brought the markets down. If you see right here, if you look across to the left, you'll see a thin line. Right there, I'll move it again so you can see it right next to the bubble. Say right here, it's going to show up right here. So I'm going to come back to it, and right there is where it's going to fail, and you can see the downslide happened as the yen rallied. So yen rallies, everything else falls, and the TLT is the long bonds also. Same story. They rally, markets fall. They fall, markets rally. And the 10-year trades with the market. So the 10-year rallies. When the 10-year gets a breath, the markets rally. So they look like the markets. So that's what happened today. Now, where do we go from here? Okay, so I'm going to just jump into just a few tickers. And first of all is the NASDAQ. You can look at it two different ways. Technically speaking, you've got lower highs, kind of considered falling peaks, although technically I don't know if they are. Maybe they are, those three, 1, 2, 3. But I would consider that if those were the three falling peaks, maybe it got satisfied already. Or, three touches of a megaphone, broadening wedge that's falling, and they say by the third touch. Well, I think we've had three and then some. This is what encourages me right here. The last candle of today. Look at the size of that candle. I was saying it was a wild move. Okay, we've had several big ones recently, but this one was defended. In other words, we got down to here and we said no, and we bought the market right up. Okay, so we had headlines that tested us hard, and then we said no, we bought it right back. Okay, so this is important in my opinion. That's a statement that says something. Now I need tomorrow to just at least hold and not have another whoosh, or if we have another whoosh down, to defend it just as vigorously as we did today, maybe even better, not let it go down so much. Then I'll feel comfortable about it. But we're still headline trading. Everybody's saying, what's going on, what's going on? What's going on is a whole bunch of things are going on, and almost none of them are fundamentals. We've got headlines of Ukraine. We've got the relationship of TNX. Well, that you can argue is fundamentally, but it's actually tick for tick, and I think more traders are reacting to what they see in the bond market. So it is fundamentally based, I guess, but it's become technical. In other words, tick, anti-tick, tick, anti-tick. So it's the fundamentals. What I mean is that the global picture has not changed. I keep saying it. The Fed's still in it. Europe is still recovering. We're recovering, although slower, but now it's starting to look good. Emerging markets are struggling. China may not be growing fast. We will find out, by the way, China tonight or tomorrow. Before they open tomorrow, we will have an important number from China. It might spook the markets, and that's why I bought some put spreads in Tesla, to short the market. If the market's going to fall, Tesla's going to fall hard. So I just bought debit put spreads in it personally. So this candle makes me comfortable because we got tested on almost a perfect storm, and we rejected the lows and we bounced. So maybe just maybe, that these levels right here are significant enough to the market that there, I drew it in red. How about we change the color to green? Just superstitiously speaking. Okay, green. Maybe, just maybe, that we got tested here. We broke out from them here. They were roofs here, right? So it was red here, and then turned into a green one. I don't want to do that. And a green one here. So it got tested a couple of times and bounced off of it. We need to have follow through, and then I'll feel a lot better. If I look at the SPX, You can see a just an impressive candle. Again, testing the same important levels. Got tested one, twice, and the SPX behaved better than everybody else today, all day. So that's pretty comforting to know. So it's credit put spreads. I know some people are selling. I know the open interest tell me that 1800 and 1825 should be good defensive lines. So low 1800s, like I should say 1780s or something, I'm comfortable selling there. And also, Apple, I said don't chase. Here's a visual. It's at a line to where it needs to prove itself. It's an important line. And if it breaks, the markets are going to break. That's my opinion, because this is the area I'm afraid about. This is the area that's important for Apple. If I expand it to 2 years, you'll know why immediately. See, this is the area I'm talking about. That's the area where it fell into the doom of, under $400 a share. I'm not saying it's going there, but I'm saying that it's an important enough level for the company to defend. And if the company gives up on it, I'm giving up on it too. And I'm going short. So that is Apple. Google, we'll talk about it tomorrow. I guess I'll send a message. I should do the Google L for perspective. I think it's been beaten up hard and long. It looks kind of like the NASDAQ, so they're just trading it as if it was a Momo and a NASDAQ. So, if one argues that this was a head and shoulders, maybe it's definitely, 510, 20 should be like worst case scenario without new, unless they completely mess up the earnings. So that's Google. I mentioned a few high flyers. Tesla, I was using as a gauge. It was rounding a little bit. It was rounding a little bit throughout the day, even when everything else started to sell off harder and harder, but it kind of maintained, so it gave me hope for a rebound during the day. Again, the candle got rejected, but it's still, that's an ugly looking chart, and you would have to need a lot of good reasons to go long it. So except for lotto ticket, maybe a bounce, but I'm not putting my money on that one. Anyway, what am I doing? What should I do trading wise? Credit spreads. They're hard to do right now, and for someone that can't take some heat. Okay, I can take heat personally. I can take credit spreads. I've been putting trade ideas in the resource page. Go see them. And I'll send out a note about some of them and where do they stand. Just look at the levels, look at the ranges, and see if you can sell some spreads outside of those ranges to where you can just generate some income. But you have to be you have to be true to yourself in saying, okay, once it hits this level, I need to start building protection, and once it hits that level, I'm out. I'll take the loss. Or once it hits this level, I'm going to book the profits. Yesterday, I said I'm going long credit put spread NDX on Twitter, and this morning on the pop, I said I'm booking it because it is, almost 40% of maximum gain on the pop. And you can't sit on profits these days. If you have profits, you book them. And if you have losses that are building, you don't wait. You either defend it or exit and just live to trade another day. Anyway, I just thought that today was a really important day to recap with a video because so much has happened. So much has happened today. The Bears, right here in the middle of the day, were out in full force on CNBC. Oh, you got to do this. We're having this and we're having that. Well, we've corrected so much already. And maybe this correction is not looking like any other correction that we've had before. Maybe it's localized. Maybe it's choppy. Maybe this was part of it, but then we recovered. Maybe this is the second part of it. We don't know what's going on in the market. Maybe it's just building for some other big whoosh coming, but that big whoosh will need a reason. The reasons we have now are not enough to drive us down to here. Just because everybody wants a correction doesn't mean we need to have one. Okay? So maybe it's bits and pieces. Maybe it's coming locally here, locally there. No one can argue that LinkedIn didn't correct. I mean, if it erased an entire year. This is a 1-year chart. It went back to zero, basically, in the last 12 months. So it's That's a correction. If that's not a considered correction, maybe it's still overvalued now, but it's corrected. Can it go lower? Sure it can. Is it like if nothing changes from here to 4 months, is it likely to be lower or higher? My gut tells me higher. Okay, without new information. Without new information that tells me to go bearish LinkedIn. I just use LinkedIn as an example. This is a 2-year picture of LinkedIn. Sure, it can go lower, but then that changes the picture completely about the whole market, because you would need a really good reason for it to go down here, and it seems like a good, well-managed company. So that's LinkedIn. Who else? Netflix. And here we go. Another. They all look the same. You can just interchange them. Oh my gosh, look at these hats. I mean, everybody's corrected down to a level that's very meaningful. That's LinkedIn. That's Netflix. So right here, if this level breaks, we have a whoosh down. But it will need a reason to break. We will need like a huge escalation of international level in Ukraine, for example, or a huge change in the assumption in the Fed, or in the growth, or something major to bring us down there. So we will need an event. What we have now, in my opinion, doesn't take us down to a lot lower level. Amazon may be working on a head and shoulder pattern where the downside might be like to 80, 90, something like that. So a friend of mine is in it, and he was crying about it the other day, and I was afraid to tell him about that. But today's candle was pretty encouraging. So again, that's a level from which it sprung before. Maybe it deserves a little drawing right here. I will do it, because look, it extends from here too. So here, today's candle. That's the level. It was roof, 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 failed, roof, bam, through it, failed, and then took off. And now it's revisiting it. But now we have a head and shoulder-ish top, top right here. So if true, maybe it has some room. I don't have any positions in all of this, except for the ones I tweet out, or tell you about them. Like the Tesla debit put spread, I took it as a hedge to some long positions I have in other stuff. So anyway, the fact is that everybody's waiting for a correction. That doesn't mean it's going to come. That doesn't mean it hasn't happened already. We've corrected quite a bit. I mean, this is a slap in the face to everybody that bought up here. So I think that this whole move is driven by the yen carry trade. It has a really big influence on it. All I keep hearing, carry trade has trillions of dollars in it. Well, if it's unwinding, if the yen keeps rising, then that carry trade there are losses there. How are you going to cover your losses? You're going to have to give it back, cover your positions, and you sell stuff to cover stuff. So that's probably why the pair trade is happening. As long as this is happening, markets are shaky, but we can pick our spots. And members, I will send out a note about picking spots and tell you what spots I'll be picking here. Tomorrow we'll be telling, this week we'll be telling, because I want to see how they're reacting to earnings. And today we had Intel, and look at that, they popped it and now they sold it. It's still positive, but it's a lot lower than it was earlier at the pop. Yahoo, I think also, they didn't like Yahoo's earnings as much, and now they like it a little better. So this is encouraging that we're holding some green on earnings. The big one will be Google. I think if Google can deliver and people receive it well, it could change the game this week. So keep posted, members, and everyone else, thanks for your time. This is Nick,